Why compliance? Easy. Because nothing can put your dealership behind the eight ball like non-compliance. Massive fines and lengthy court battles, not to mention loss of your hard-earned reputation, are at stake here. As an entity that takes part in large cash and credit transactions, your dealership is subject to many of the same laws and regulations as traditional lenders such as banks and credit unions. In this overview, we'll touch on what to expect in upcoming lessons, familiarizing you with the alphabet soup, if you will, of Automotive F&I Compliance. What is Regulation Z, Regulation M, Regulation B, F.C.R.A, O.F.A.C, G.L.B.A? Who is the FTC? Why does the Patriot Act apply to my dealership and others? Let's get started. Regulation Z of the Truth in Lending Act, or TLA, was designed with the intent to enable a customer to compare the cost of a cash transaction versus a credit transaction by mandating that certain disclosures, for example, the finance charge, be made clearly and conspicuously in writing in a form that the customer may keep. Regulation M of the Consumer Leasing Act, or CLA, is similar to Reg Z, but differs slightly because the leasee has the right to possess the vehicle and use the vehicle, but ownership remains with the lender. Regulation M also has its own disclosures specific to a lease transaction. Regulation B of the Equal Credit Opportunity Act, or ECOA, simply states that all applicants are to be treated fairly in every aspect of a credit transaction and in no way influenced by an applicant's race, color, religion, national origin, sex, marital status, age, if they have received public assistance, or if they have previously exercised a right under the Consumer Credit Protection Act. Think you are compliant with Reg B? Double check. Most Reg B infractions are completely unintentional. The FTC's Fair Credit Reporting Act, or F.C.R.A, is devised to protect the privacy of consumer information, ensure accuracy and integrity of consumer report information, prevent identity theft, and improve the conflict resolution process by use of adverse action notices and the risk-based pricing rule. Think only the lender is responsible for sending adverse action notices? Think again. O.F.A.C, the Office of Foreign Asset Control, is a division of the Department of the Treasury that enforces the economic and trade sanctions based on U.S. foreign policy and national security goals. What does this have to do with your dealership? Well, O.F.A.C maintains the Specially Designated Nationals List, a list of individuals, companies, etc., prohibited from conducting business within the U.S. Do you know what to do in the event one of these guys is sitting in your showroom? Here's another one that you may not automatically associate with your F&I department, but remember, your dealership is considered a financial institution, and one of the goals of the Patriot Act is to prevent money from terrorist activities from being laundered through businesses and financial institutions. By law, you need a policy in place for monitoring and reporting large cash transactions. G.L.B.A, the Gramm-Leach-Bliley Act, governs specific disclosures such as privacy notices and opt-out requirements, but also encompasses the legal requirements as to the collection, use, and protection of personal information by way of the privacy rule and the safeguards rule. In subsequent lessons, we will discuss the difference between a customer and a consumer, and to whom you are responsible for handing a privacy notice and why. We will also dig a little deeper into exactly what the privacy notice must consist. The safeguards rule, as outlined in the G.L.B.A, applies to how your dealership handles non-public personal information on behalf of the customer. How is this information processed, stored, transmitted, and disposed of in your dealership? What about your third-party vendors? FACTA, the Fair and Accurate Credit Transaction Act, is another FTC regulation whose rules work in concert with the privacy rule and the safeguards rule, namely the disposal rule and the red flags rule. The disposal rule requires that all consumer information to be properly disposed of and addresses what are considered reasonable measures to protect the information from being unlawfully attained. The red flags rule is intended to thwart identity theft. We'll look into detecting red flags, evaluating red flags, responding to red flags, as well as how to administer and maintain a red flags program in your dealership. The Magnuson-Moss Warranty Act is a federal law passed by Congress, which requires specific disclosures in relation to any written warranties and service contracts. The purpose of these disclosures is to certify that your customers are fully informed as to the scope and terms of any written warranties. We will explore these rules and regulations further, along with a host of other compliance issues in subsequent lessons.